As of Wednesday, July 22, 2026, one of the most consequential pieces of financial legislation in recent American history is sitting in limbo. Here is a striking fact. Prediction markets currently place the odds of this bill passing at just 43%, and that figure only reached that level after unverified reports suggested a breakthrough on July 21. The Crypto Clarity Act, formerly titled the Digital Asset Market Clarity Act, has cleared significant political hurdles, earned support from both major parties in principle, and yet cannot get over the finish line. Why? A single ethics provision tied to President Donald Trump is holding the entire bill hostage, and Senate Democrats are refusing to budge. The bill is designed to give crypto markets a clear legal framework for the first time, defining which regulator oversees which assets and giving investors and businesses the certainty they have demanded for years. But politics has intervened at the 11th hour, and the outcome before the Senate's August recess remains genuinely uncertain. Let us be precise about what is at stake here, because the scale of this legislation matters enormously. The Digital Asset Market Clarity Act is a sweeping piece of law that would establish formal rules for the cryptocurrency industry across the United States. Currently, crypto companies operate in a gray area, caught between the Securities and Exchange Commission and the Commodity Futures Trading Commission, with neither agency having clear authority over the full range of digital assets. This bill would resolve that confusion by drawing a definitive line between which tokens are classified as securities and which are classified as commodities. For investors, that clarity is transformative. It determines how exchanges operate, what disclosures platforms must provide, and how trading is supervised. The bill also covers stablecoins and digital trading platforms, making it one of the most comprehensive digital asset frameworks ever drafted in any country. Analysts have long argued that passing this legislation would unlock a wave of institutional investment into crypto, as fund managers who currently cannot touch digital assets due to regulatory ambiguity would gain the legal certainty they need to enter the market. Now, here is where the controversy begins, and this is the detail that most news reports gloss over. Embedded within the bill is a provision designed to restrict the president and senior government officials from personally profiting from cryptocurrency while in office. This is not a minor technical amendment tucked away in the footnotes. For many Democrats, it is a matter of fundamental democratic accountability. President Trump has significant and well-documented personal ties to the crypto industry, and critics argue he stands to benefit financially from the very legislation he is championing. The ethics clause is intended to prevent exactly that kind of conflict of interest from influencing public policy. As of July 21, 2026, the White House confirmed it had agreed in principle to include an ethics provision within the bill. However, Democrats say the version on offer does not go far enough. They want stronger, more enforceable language that closes the loopholes they fear would allow financial benefits to flow to the Trump family regardless of any formal restriction being written into law. Senate Democrats are not simply being obstructionist for the sake of it, and understanding their specific concerns is crucial to understanding this standoff. President Trump's family has launched several cryptocurrency ventures in recent years, and critics point to those business interests as a direct and concrete conflict with the public interest in unbiased legislation. Democratic senators argue that without robust, binding, and independently enforceable ethics language, any vote in favor of the Clarity Act would effectively hand a financial windfall to a sitting president. That is a political risk very few Democrats are willing to accept, particularly heading into a challenging electoral environment. The progressive wing of the party is also watching proceedings extremely closely. Any senator seen to capitulate on ethics could face significant backlash from their base in primary contests. As of July 22, 2026, multiple Democratic senators have publicly stated they will not support the bill in its current form, making bipartisan passage a genuine challenge with the clock ticking rapidly toward the August recess. The White House has not taken this opposition quietly or passively. On July 21, 2026, the administration publicly described its proposed ethics compromise as historic, urging Senate Democrats to accept the deal and allow the bill to proceed to a full floor vote immediately. White House officials framed their position as a significant concession, arguing that the administration had moved considerably on the ethics question and that Democrats were continuously shifting the goalposts rather than negotiating in good faith. The pressure campaign is real and intensifying. With the Senate's August recess approaching rapidly, there is a very narrow window for a workable deal to be struck and the bill to be voted on. If the legislation does not pass before the recess, it risks losing momentum and could face an even more hostile legislative environment when senators return in September. White House officials have reportedly engaged in direct, one-on-one conversations with Democratic holdouts, offering verbal assurances that the ethics language would be tightened further. Whether those assurances satisfy the senators in question remains the central, unresolved question of this week. Financial markets and decentralized prediction platforms are watching this political drama with intense interest, and the numbers are instructive. On Polymarket, one of the most widely followed prediction platforms in the world, the odds of the Crypto Clarity Act passing jumped to 43% on July 21, 2026, following unverified reports that President Trump had agreed to the ethics provisions being demanded by Democratic senators. That shift is meaningful. It tells us that serious capital is being placed on the possibility of a deal being reached, even though the situation remains highly volatile and can shift again within hours. Crypto markets themselves have also been responding to the news flow. Digital assets broadly sensitive to U.S. regulatory developments have seen elevated trading volumes as traders position themselves ahead of either outcome. If the bill passes, many analysts expect a significant and broad rally across the crypto sector, as the removal of regulatory uncertainty historically tends to unlock substantial institutional investment. If it fails, the opposite pressure may emerge, particularly for assets like XRP, which has seen bullish price predictions specifically tied to the arrival of regulatory clarity in the United States. Looking ahead from today, July 22, 2026, the immediate focus is on whether Democratic holdouts can be persuaded to accept a compromise ethics provision before the Senate rises for its summer recess. The window is extremely tight. Senate leaders would need to bring the bill to a floor vote within the next few days for it to have any realistic chance of passing this legislative session. If the ethics language can be finalized and agreed upon by both sides, the broader bill does appear to have sufficient votes to pass. Many Republicans are backing it enthusiastically, and a meaningful group of Democrats has signaled willingness to vote yes if their ethics concerns are adequately resolved. However, if negotiations break down once more, the bill will almost certainly be deferred to the autumn session, introducing months of fresh uncertainty for an industry that has been waiting years for this legal clarity. The next 48 to 72 hours are therefore genuinely decisive. Watch for announcements from Senate leadership or the White House regarding any revised ethics language, as that will be the clearest indicator of which direction this is heading. Here's what all of this means for you, whether you are watching from the United Kingdom, Europe, or anywhere else in the world. The Crypto Clarity Act represents a genuine turning point for the digital asset industry, and its passage or failure will have real, tangible consequences for crypto markets well into 2027 and beyond. The ethics dispute is not mere political theater. It reflects a genuine and important tension between the crypto industry's legitimate desire for regulatory certainty and the democratic principle that those who write and champion legislation should not personally profit from it. As an investor or enthusiast following these developments, the key signal to monitor is whether Senate Democrats and the White House can agree on ethics language in the coming days. A deal struck before the August recess could trigger a significant positive market reaction across the crypto sector. No deal means more uncertainty, more delay, and potentially more volatility across digital assets. Keep this channel close, stay informed as this story moves at pace, and subscribe now so you catch every update the moment it breaks.